existing channels, we're not marketing to consumers. We're saying, hey, you're already in a store. The store will float an incentive to you if a bank wanted to. So the distribution is way easier if you do it in the right approach.
Welcome to the Mastering E-commerce Marketing Podcast. I'm your host, Eitan Koter, co-CEO of Vimy. In an era of rising acquisition costs and increased competition, this podcast is dedicated to helping you drive sales, engage customers, and build meaningful communities so you can turn passive visitors into active buyers. Now let's get started with the episode. Hello and welcome to Mastering E-commerce Marketing Podcast. I'm really excited about our host today, Roee Peled, co-founder and CRO at Hoox. Roee, how are you? Welcome to the show.
Very good. I'm super excited to be here.
Nice.
Thanks for having
Where are
me.
you based, Roee?
I've been based in Miami for the past 4 years, 12 years in the US.
That's a good place to run a financial tech company, right?
Can't complain. Not many people know, but the second HQ of most banks are based here, basically.
So, Roee, let's start probably with a quick introduction about Hoox. Tell us what you guys are doing.
Sure. So we started Hoox about 2 years ago. What we're doing in Hoox is we're providing a tool for credit card companies to target their cardholders when they shop. Usually it's a digital environment, and float an incentive to use a specific card before they pay, what we call an activation.
What's the incentive from the credit card companies? They want to encourage the shoppers to use specific card or to use some kind of an incentive plans, or what's the incentive from their perspective?
Well, issuing cards today became kind of a commodity.
Yeah.
If you look on the US market, there's more than 1.5 billion cards out there in circulation. This is over 200 million size of carded population. And what's happening is there's a fierce competition on top of wallet, like which card you're going to use for each transaction. Most of them, what they do, they're using very legacy methods. They're using emails, text messages, TV commercials, street signs to encourage you to use a specific card or specific benefit. And those things convert in a very low conversion rate. They're far from purchase intent. And we thought we could do better.
So what inspired you to co-found Hoox, and what is the gap that you saw in the market?
Well, my co-founder came from MasterCard from many years of controlling the budgets of activating cardholders. And his story and what attracted me to join him to the journey was back in the days, they were trying to activate customers, make them use their the MasterCard card when they walk into the McDonald's branches. So what they used to do is they put a roll-up in the entrance to every branch, and then they measured, if you use their MasterCard, you get whatever off. It was cannibalizing the people that were about to use the MasterCard anyway. And it was very unmeasurable. And we thought that what happened to the ad tech and digital industry in the last 20 years didn't infiltrate into the credit card industry.
Yes. So what's the tech behind? What's actually happening in terms of the user experience?
Well, the challenge that banks and merchants nowadays have, and that's why you see promotions on an email coming from your bank and not in your store, is because collaboration in real time between those two entities is very complex, both from technological gaps and from privacy concerns. And so what we did from the onset is we said we want to enable a solution that will have no PII access, no personal identifiable information. And so what we did is we took a concept from crypto called zero knowledge, and we built, if I'm going to dumb it down, we built kind of a data clean room that sits in the middle. We provide encryption protocol for both parties, and we're able to make a match in real time over consumer and make them personalized offer without even knowing who they are.
Even before they've typed the credit card details or anything.
Yeah, what happens is the use case is you go online, you choose your product, you go to the checkout, even before you plug in your card number. You're always asked to identify yourself by email or phone number. At that moment, there's an API that in background that runs into Hoox after encryption. And if there's an offer, meaning if there's a bank or card company that actually targeted you and wanted to offer you something, you will see an instantaneous personalized offer, which converts in very high percentages. Why is that so? Because this moment is the golden moment. You're already reaching out to your wallet. You're willing to pay. And my ability to impact your decision of which payment method to use
Wow.
is super high. In comparison, the legacy methods working like sub 1%, we're seeing
Wow.
25%.
Yeah. So I see that there are various stakeholders like in this transaction, right? Obviously the card issuer, the shopper, the online business itself can be a brand or online retailer, obviously Hoox. Can you just cover, I mean, what are the benefits for each one of those stakeholders in this kind of transaction?
Yeah, you know what I love here is that it's kind of a win-win-win for all stakeholders. For the banks and the card issuers, they're spending a lot of money. The spend around the globe is like $200 billion a year on card retention and activation. And if you look on the TV commercials or street signs, there's a lot of activity and spend happening on those channels. And what we're telling them, hey, take some of those budgets and put it in a more effective machine that will show you results in ROI. For the merchants, we're saying, hey, we went out to banks and issuers. We brought marketing budgets. These guys want to help you close more deals on your
Great.
store for free. And for consumers, unlike if you live in the US, there's apps like Honey or Capital One Shopping extensions. In this case, you don't need to download anything. You just instantly get more
So in
rewards.
terms of customer activation, this whole concept, right? What's how is it evolved, you know, throughout the years?
So, you know, the use case we started from is that we met with issuers and we asked them two questions. How many cards do you have in your portfolio? Let's say you have like 1 million cards in your portfolio that you're managing, which is not a big portfolio, by the way. And then the second question is, how many of them are inactive? And inactive, most banks define it by 12 months without a statement, no transaction. And the answer in the US is above 42%, which is crazy because on average, an issuer spends $200, $300, sometimes $1,000 to acquire you as a new cardholder. And so if you're not using their card, these amounts are now sitting on the shelf. Now, getting a new customer costs the same. Re-engaging you or reactivating you or making you from inactive to active might cost you much less. But you have to approach those customers smarter. And so once we started from the use case of inactive, we started to talk to portfolio managers. We understood the problem is wider because if I'm a card portfolio manager and I have those 1 million cards and let's say 400,000 of them are inactive, I probably have 100,000 of them which are top of wallet, behaving well, but in between there's other profiles like spending less than $100 a month or using it less than twice a quarter. And we built a smart engine that kind of adjusts with incentive and how to approach each card profile and move most of them to the top of wallet.
What are some of the some of the other things that the card issuer are doing for, you know, to achieve this top of wallet status? I mean, we know that they are probably the largest sector in terms of advertising, right? In all media. What are some of the tools or the processes they use for the activation process?
Well, the legacy methods they're using commonly is like when you're in your bank account or in your app, you will see rewards. You will see the most prominent thing they do is called card linked offers, which is, hey, this is your weekly newsletter. Next time you go to this and this store, if you choose in advance and you pay with our card, you will get some benefits. So these methods are the most common. A lot of splurge on media and advertising. Rewards like points and miles and flights and hotel and travel are kind of the core center of it. And there's some leaders in this sector, like Amex is doing tremendous work and Chase is doing tremendous work, but there's a fierce competition.
So what are some of the key matrices that you're measuring? Well, what do you find, you know, after achieving product market fit and obviously having some good happy customers? What are the results that you measure, or what some of the key KPIs that are important for you guys?
Well, I'll start from the other side. The portfolio manager wants to go to their management at least once a quarter and show them, hey, I started the quarter with, let's say, 25% inactive cards, and now I'm on 24, 23, or 22. I want to show some progress. They want to show how the spend went up, right? They want to increase the volume of the transaction with their cards. They want to show more frequency. Internally, the way we measure ourselves is how many cards we're actually targeting. So let's say I work with 3 banks and each one targets 1 million cards. Now we're targeting 3 million cards. I want to measure how much traffic I'm getting, how many requests for offers I'm actually getting in real time from points of purchase. And at the end of the day, our most important factor is how many activations we were involved in, meaning we identified a cardholder that is entitled for a benefit from a bank. We presented an offer. How many of them actually completed the transaction with the card we wanted them to use, and how much they overall spend in this card.
Interesting. And I saw that some of your advertising, you claim to achieve 10x more effective activation at a fraction of the cost, right? So
yeah, it's even more so because those legacy methods like the newsletter, there's like sub 1%. We're seeing 25%. You can do the math way higher.
What about the fraction of the cost? What do you mean by that?
Well, when you put a TV commercial and you're spending hundreds of thousands, it's very difficult to tie it into the transaction. Our business model is kind of a hybrid SaaS, where there's a monthly payment for the Easter, but it's completely tied into performance. So if we're doing well, we're getting paid more.
Interesting. So, I mean, Hoox is a great example of a fintech implementation or a solution, right? And how do you see the financial sector in general implementing technologies, or what's the importance of innovation, right, in success of these card issuers, banks for the future of this financial industry?
Well, the downside of working and selling to those players is that the sales cycle is very long. It's not even, when you're an innovator, it's not even about integration or technical barriers. It's about convincing the business side and going to the privacy side and to the legal side and getting conviction internally from multiple stakeholders until you have an agreement and let's do this minimal integration that we have to do. The upside is that it's very sticky. Once you're in, it comes with scale and it's probably there for years to come. So we're super excited to be selling to those players. And what's exciting is that we have a very novel solution for a very big problem, which has no real competition.
What do you mean by that? No real competition?
There's many platforms and methods you can use to increase engagement. We haven't seen other players do what we do, which is pre-purchase, anonymized, personalized incentive that goes directly like the origin of the name Hoox. We're making those hooks and allowing you to really target in real time at the right time an exact customer with a very tailored
So it means that the whole, let's say, sector of what you guys are doing is like in its infancy and it's going to evolve. I guess if you have a lot of competition, then customers knows that it's a solid, mature industry with a proven solution, and then you can choose various alternatives. What are some of the major objections that you guys are hearing from customers?
I would say there's so many solutions out there, especially from the merchant side, that the intent is to increase conversion. And I think nowadays merchants are they're drowning into hundreds of offers and solutions on how to make their store better, right? A good store makes like 3% conversion rate.
Sure.
It will never be 100%. But you have to keep optimizing and optimizing it. You have to choose the right tool. And sometimes you have limited resources on the real estate, right? If you're offering BNPL on your store, you're not going to offer 2 solutions of BNPL because you're going to distract the customer. So I would say the main objection from merchants would be they don't want to cause distraction and they want to see a real uplift in conversion and improvements to their P&L. For banks and issuers, I would say there are no barriers apart from really being the innovator and convincing this is the right method to keep
And
going with.
the pain that you're targeting is obviously, how, those financial services, card issuers are retaining customers, retaining them as a loyal customers and keep using like top of wallet, right? That's just the major pain that is out there currently.
Yeah, those guys, they're making money from interchange fees. So their incentive is to make you use your card as much as possible. If you're not using your card, there's more risk on their end because usually a card is
Mm-hmm.
accompanied with a credit limit. And if you're not using it now, it just sits on the shelf with the risk. Now, there's a lot of market dynamics impacting, I think, a good trend towards Hoox. There's a trend now of pay by bank. Very soon, you're going to see a lot of merchants offering you to pay not with a credit card, but directly from your bank. And that puts a lot of pressure on the credit card companies because now they need to do more in order to kind of make
Yes.
sure you're using your
Yes.
card.
And in terms of the way you're implementing your product, obviously achieving more product market fit, what was the journey look like? So, I mean, when you started, it was like this was the version that you kicked off and launched to the market, or there was some like major changes in terms of the user experience of the product, or what were some of the key lessons that you learned since launching to achieving product market fit?
Yeah, so first of all, from a sales perspective, we started by going direct to issuers and going
Mm-hmm.
direct to merchants. And nowadays, we're hardly going direct to both. Like on the merchant side, we're integrating with payment service providers or the payment gateways, integrating with point of sale vendors, e-commerce platforms. And then once you do one integration, it kind of opens you to an ocean of other merchants. It just simplifies everything. On the issuer side, we're lucky to have MasterCard as a partner, and they've been tremendous as a very big payment network to introduce us to the issuers working on their network. So I would say from a sales perspective, we learned a lot. On the product side, we started from a pure API product. There was nothing front end, and earlier this year we released our first version of the SaaS product, and it's looking good, and
Nice.
customers are
So this
starting
is
to use
going
it.
now towards more of a PLG kind of marketing on the SaaS side of
Yeah.
things, yeah. So you choose like you have that indirect approach to e-commerce platform, to payment gateways, to merchants, and you have the masterclass. That was like the strategy from the get-go, or you tried a lot of things, you went direct and then realized it's not the right way, or how was this experimentation
Oh.
process go?
I want to say that it was strategic, but sometimes like spaghetti,
Yeah, trying
you're throwing
everything.
it out there and you're seeing what sticks, and suddenly you open up a new category. Hey, there's checkout recognition industry now that is
Mm-hmm.
thriving, one-click checkout, and there's so many players there, and it's an amazing partner to us, and these guys have an incentive to make it happen. So I would say a lot of things happened when we just started
Yes,
talking to the
yes.
industry.
Oh, very interesting. So, one of the theories, like the theories, right, in startups is like the lean startups is don't hire your sales team too fast, right? You work a lot on the product, PLG approach, founder-led content, word of mouth, because sales, they have their ways of closing business, even if the product is not like perfect, right? And if you don't have sales and they're not interrupting your product management cycles, then you get to that perfections of fine-tuning the product to customer satisfaction, and then word of mouth is working, network effect, and all this approach. And you were there as a CRO from the early days, right? So what are your thoughts in terms of these various go-to-market processes?
So it's funny that you mention it. I think that at some point, like a year ago, we thought we had like an
Mm-hmm.
amazing product market fit, and we started making the team bigger in terms of business development. Um, but if you do it too early, it's kind of like you're trying to outsource your problems
Nice.
to someone else, and it will just get stuck in the process. And so what happened is we tried it for like I would say half a year, and then we said, okay, let's go back to founder-led sales. perfect the process, and then go back to building the team.
Nice.
This is
So
what
you
we're
had
doing
a
these
very
days.
agile first mindset, but probably also the process and the platform to support that quickness and flexibility and
Yeah,
agility, right? Not every company can
yeah.
do that, obviously. Interesting. How do you see the
There is an advantage in keeping the mindset of a founder-led sales for as much as you can, because you
yeah
also control your destiny now. And it's way easier to navigate the ship. It's a smaller ship, but it's way easier to
yes,
navigate
and
the
I think
ship
it's
like
very
that.
very powerful with customers because they talk to the founder. It's very authentic. You know how to answer
Exactly.
questions. You know, not bullshitting them and wasting their time, right? With other things. So how do
Yeah.
you do in terms of the, let's say, the marketing or some of the things that are working for you guys in terms of, out like inbound versus outbound? I mean, how do you guys are marketing the solution?
Um, I- it's a tricky industry because the partners we work with are either banks and issuers, which is not like a cold call LinkedIn message. It's a lot of like direct intros and a lot of conferences and very direct approach. Like the email automation of 5 emails is not gonna work here. And the same on the merchant side, because if you go to the smaller merchants, maybe you could do it with automation and scale it by marketing. But when you work with the bigger guys, you need to get to the right person at the right time, convey the message of what's the solution, why it's different than another solution on the conversion basket that they have, all those solutions that they have. So I don't think we nailed the scaled marketing approach yet. We're more
Yeah.
like a sniper approach.
And look, I mean, things are changing so fast, right? You think you settle in some kind of a marketing channel that is working for you, and a few months passed and it's not. So it's always changing. So there is
Exactly.
a kind of a building relationship because these are probably top executive, large organizations. It's not, hey, I have some amazing solution to pitch.
Yeah, well, one of the things I really like in what we're doing is that many companies try to solve a similar solution from the B2C perspective. So they're saying, hey, you're a consumer, why don't you download an app? Then you plug in all your cards, and then we'll help you optimize the use. And what we're doing is we're using existing channels. We're
Yeah.
not marketing to consumers. We're saying, hey, you're already in a store. The store will float an incentive to you if the bank wanted to. So the distribution is way easier if you do it
So
with
it's
the right
also
approach.
less friction, right, for the end users, obviously, which is very, very important with
Exactly.
this overwhelming of apps
Yeah.
in all our phones, right? How do you see the market itself, like the customer activation opportunity in general? Do you see it's like it's a very solid one? It's going to be kind of a consistent, or you see a lot of changes happening?
First of all, we want to own it. I think the way that um, most organizations behave is they have loyalty machines, and there's a lot of things that are happening when consumers are out of their loyalty machine. And in the case of credit cards, those are like 40% inactive, they're just floating around. We think we can own this space of pushing them back into the loyalty machine, making them active again. Activation is not only 1 and 0, it could be behavior. We had this QSR provider that told us, hey, my goal is I have customers coming in, paying, buying my meals twice a month. I want to make them buy my meals 5 times a month.
Yeah.
That's an activation as well. So I think when you keep doing it in a personalized way, where this is how consumers want to see it, you're becoming more effective in it, and solutions like that will keep
And if we
coming.
try to be more practical, let's say more tactic, like next year, for example, what's the best case scenario for you as a company?
Well, we have our plan and KPIs in terms of how many cars we want to see on our network, how many activations we want to see out there, and which percentage of the market we want to own within 5 years.
Yes.
Yet to be seen.
Yes, looks like you're on track. So, but nothing set in stone. It's never ending. Great, Roee. So I'm very interested in work-life balance and what my guests are doing outside of work. What do you do to unwind, to relax, just to you know go out of the daily clutter?
First of all, I'll tell you, before we launched the journey, the three of us, the three co-founders, I said, and we all said,
Okay.
want to enjoy the journey. I'm not just saying as a cliche, it's not my first rodeo. And I really like what we do. I wake up not to work in it, but to kind of help build a vision. And especially when you're an innovator, every no and every block just kind of motivates me more because I know I'm right. Um, what I do for fun, I like running. I like going to nature. I live in Miami for a
Okay.
reason. And I think it overall it
Yeah.
helps the business as
You
well.
know, we're doing this also on video, and I look at you, and you're smiling like 90% of the episode, right? And it's really really nice to see. So I guess you're doing something right. So well done, well done. Boy, anything
Thank you.
else you want to add? Probably give some tips to other colleagues out there, or something that is important for you to for this summary.
No, this is great. Just put yourselves out there. This like so thankful for the opportunity to meet and talk to people as such. And thanks for taking the time to
Yes,
hear our
amazing.
story.
Thank you so much, Roy. Good luck. Thank you for listening to the end of this episode. If you found this episode valuable, please subscribe so you won't miss any of our future content. Explore Vimy, the video commerce platform that includes live shopping, shoppable video, and social commerce capabilities. Visit Vimy at www.vimy.net. We appreciate your support and look forward for bringing you more valuable insights in our next episode.